We can start now, ma'am. Kanaya.
Yes, Kishan. Let's begin.
Okay. Good morning, ladies and gentlemen. Thank you so much for joining us this weekend morning. We truly appreciate you taking out valuable times to be with us today. Welcome to today's webinar on SIF, Specialized Investment Funds. In today's session, you will gain a clear understanding of what is SIF, their advantages and benefits, how investments can participate in SIFs, and much more that will help you understand this emerging investment avenue. Total duration of today's session is 75 minutes. The first 45 minutes will be dedicated to in-depth knowledge of discussion on SIF. In next 20 minutes, we'll cover an overview of CFP certification. The final 15 minutes will be interactive Q&A session where you can ask your questions directly to Madhusina ma'am. Now, it's my privilege to introduce our esteemed speaker for today, Ms. Madhusina ma'am. Madhusina ma'am has been associated with ICFP for the last 22 years. She began her journey with us as a visiting faculty, later served as academic head Delhi, and in 2008, she took over the campus director, Mumbai. Currently, she is the Dean of ICFP. She is CFP, CIWM, and a multiple NSM certified professional with over three decades of rich experience in education, training and consultancy across financial services, product marketing, wealth management, and financial planning. Madhu ma'am is also a former director of Financial Planning Standard Board of India. She is author of two acclaimed books, Financial Planning Ready Reckoner, Retired Wealthy Easy Strategies for All, both published by McGraw-Hill Publications. I would also like to share that recently Madhu ma'am was awarded Best Faculty in Financial Planning by Financial Planning Standard Board of India, a truly well-deserved recognition. Thank you so much, ma'am, for sparing your valuable time and with being with us today. Now, over to you, ma'am.
Thank you very much, Kishan. Am I audible? My voice is clear?
Yes, ma'am.
Good morning, everyone. On behalf of International College of Financial Planning, I welcome you all for this today's webinar on Specialized Investment Fund. I'm sure you have heard about mutual funds and some of you must be investing in mutual funds also. So SIF is a product which is recently approved by Securities and Exchange Board of India, which is, which is a product which is like a mutual fund product only, but there is some difference in that. When we talk of mutual funds, the minimum investment in a micro SIP can be 100 rupees. And most of these schemes, the minimum investment is rupees 500. But if you want to invest in specialized investment product, the minimum investment is rupees 10 lakhs. So mutual fund is for everyone, but SIF is for sophisticated, more evolved investors, people who have more knowledge, they have a high risk appetite, they have already understood about mutual funds, they have investments which have already done the core portfolio they have made in mutual funds to meet their various financial goals. Now the surplus money which they have can be also invested in various SIF products launched by few mutual funds have already started doing it, and more SIF products will be available in the mutual fund industry. Mutual fund product can be segregated asset types, asset allocation types, like they can be large cap funds, small cap funds, they can be equity funds, balanced fund, debt funds, and sector funds as well. But same thing is available in SIF also. But the real difference lies in investment strategy. So the investment strategy in case of specialized investment product is different. And when we come to taxation part, it is same as mutual funds. So it is a new, let's understand about what is specialized investment product. A specialized investment fund is a new category of investment product in India, which is introduced by Securities and Exchange Board of India. So they have introduced this product to bridge the gap between traditional mutual fund schemes and high ticket investment options like portfolio management services and alternative investment funds. Now, when we come to portfolio management service, PMS, the minimum investment is rupees 50 lakhs. And when we talk about AIF, the minimum investment is rupees 1 crore. So there's a huge gap between, two options. One is minimum 500 rupees. Others are PMS 50 lakh and 1 crore. So this scheme was introduced so that people who have experience and they want advanced strategy-driven portfolios with higher flexibility than standard mutual fund schemes, and they still want to work within a regulated and tax-efficient framework. Regulator means SEBI is the regulator because this scheme is launched by mutual funds only. And for mutual funds, regulator is SEBI. So, and tax efficient also. So people who have large amount of money, more than 10 lakh rupees per scheme they can invest, they would like to go for specialized investment funds. Now, many of you some of you may be working with some banks, mutual funds, insurance companies. Some of you are practicing mutual fund distributors. Some of you are students. So, you would, when you start actually interacting with clients, you may come across different type of clients. Some are retail clients who have less amount of money. They have to save money for through SIPs for various investment goals which they have, financial goals which they have in their life. And you will also come across people who are experienced, who have large amount of investments already done in mutual funds, and they are looking for something better than a traditional mutual fund scheme. Now let's understand what are the key features of SIF. Who are the target investors? SIFs are intended for high net worth individuals or accredited investors and accredited investors. Now, who is an accredited investor? Any individual who have income of 2 crore plus annual income or who has more than 7.5 crore of net worth. And out of 7.5 crore, rupees 3.75 crore is in financial assets. And corporate accredited investors who have Indian rupees 50 crores net worth. And who all can also, the target investors are institutional investors who are comfortable with higher risk, and they are also able to understand complex strategies. So these SIF schemes are not suitable for beginners. A person who is starting investing, who is new joining in a company, he is getting some surplus income, he should not think about investing into SIF. They should start with basic schemes of mutual funds. Now coming to minimum investment in case of SIF, minimum investment is rupees 10 lakh per investor across all SIF strategies within a single AMC. Now let me explain to you this. Suppose one AMC launches two different type of SIF schemes. In two schemes, you have to invest minimum 10 lakhs. Just as in case of other mutual funds, you have to invest minimum 500 rupees. Here you have to invest minimum 10 lakh rupees. But this requirement is waived for accredited investors. Now, what are the investment strategies? When we talk of normal mutual fund scheme, they use a long only approach. Long only means when you invest money in the mutual fund scheme, on your behalf, they invest money into different products, different stocks. If the scheme is pure equity scheme, they will invest in different stocks. That is, they will buy different stocks. If it is a mix of scheme, equity and debt both, they will buy stocks as well as they will also buy bonds. So mostly in case of mutual fund scheme, it is only long only. Long only means they will buy on our behalf, and when the prices of stocks go up, they will benefit from rising prices. But when we talk of SIFs, they can employ more sophisticated techniques. What are these sophisticated techniques? Are long short position. It means they will take long position, that is buying, and they will also take short position, that is selling. So they will try to benefit from both long buying and selling positions. When they will make profit in buy position, long position, when the price of the stock goes up. And when they would benefit from short position, that is selling, when the price goes down. How it works? Short position, how it works? So fund manager expecting that price of this stock will come down. So what they will do? They will sell this stock now, and when the price goes down, they will buy the stock later. In this way, they will be making profits on short positions. When they will make profit in long positions, when they buy today and they expect the prices to go up, they will sell later on, or they can sell later on when required. So that is long position. So they will make profit in long position when the prices go up, and they will make profit in short position when the prices go down. sector rotation, dynamically shifting investment among select sectors based on market trends. So they will also keep on shifting between different sectors on the assumption that on the research which they have done that this particular sector will do well in next 2 months, they will buy that sector stocks. And any sector which will not do well, they will sell that sector stocks. They also follow dynamic asset allocation, that is, they rebalance across various asset classes like equity, debt, real estate investment trust, and infrastructure investment trust. So when they feel that the price of one asset has gone up, they will sell that asset and they will buy that asset where the price has come down. This is called rebalancing. So they will keep on doing a lot of research. They will be actively involved in buying and selling. That is, so they will be doing regular rebalancing also. In case of normal mutual fund schemes, the regular rebalancing is not done. Now coming to regulations and taxation, SIFs are regulated under the SEBI Mutual Funds Regulation 1996 and they offer the same tax benefits as mutual funds. I think the things are very, very simple as of now, that it is somewhat better than a normal traditional mutual fund scheme in terms of strategies, in terms of amount of investment required. So only a person who has good amount of knowledge, who can understand the strategies, who can withstand the up and down in the market, he would look forward to invest into SIF. Now coming to liquidity. Now, if you want to sell your mutual fund scheme, you can submit the redemption request. And within 3-4 days, your money will be coming to your bank account. But when it comes to SIF, it may take around 15 working days, right? So this liquidity will also vary by the specific fund structure and strategy. It can be open-ended or it can be an interval fund. Redemption will be less frequent and it will involve more time period, maybe up to maximum 15 working days. Let's understand two basic terms. Long position, I explained to you earlier. The fund buys stocks it believes are undervalued and will appreciate in value. So the price of the stock is less than what is their net worth of the stock. That is called intrinsic value. So they will buy that stock which they feel that the price will appreciate in future. And in short position, the fund borrows the stock and sells that stock it believes are overvalued and will decrease in price. So they will sell the stock first, and when the price of the stock comes down, they will buy back the stock. So they will buy the stock, and from where they have borrowed the stock, they will give the stock back to the lender. So this is called short position. This is not allowed in a normal mutual fund scheme. This is allowed in SIF only. So mutual funds work on long position only and no short position. Use of derivatives. If you have heard about F&O market, derivative market, have you heard about future and options market? I am sure few of you must be knowing. So there are three verticals in stock market. One is cash market, where you buy and sell stocks. This is called cash market. This is also called spot market. There is one more vertical in stock market, which is called derivative market, F&O, future and options market. And there is a third vertical, which is called wholesale debt market segment, where all the government securities are also getting traded. So derivatives is not allowed in case of mutual funds. It is allowed only for hedging purpose. Hedging means when the mutual fund manager has to protect the value of the portfolio, they will use hedging. They will use derivatives, options and futures to protect the value of their portfolio so that the retail investor doesn't suffer loss. But in case of SIF, thus derivative trading is allowed. So SIF will have both long position and short position. So they will buy and they will also sell. Use of derivatives in SIF is through futures and options also. So when you invest in SIF, you have to understand that around 25 to 30% of the money is traded in derivative market, F&O market, future and options market. Now let's understand some comparison between SIF and other investment avenues. So minimum investment rupees 10 lakhs in case of SIF. In case of traditional mutual fund schemes, as low as rupees 100. In case of PMS, it is 50 lakh rupees. Investor type, in case of SIF, people will be HNIs, high net worth individuals, experienced investors. But in case of mutual funds, Any investor can invest, retail, general public. It doesn't mean that in case of mutual fund, the high net worth don't invest. They invest in mutual fund schemes also. People who have large amount of money, they invest in mutual fund schemes. But this SIF is a recent introduction only. So before that, HNIs were also investing in mutual fund. Even ultra HNIs were also investing into normal mutual fund schemes. When it comes to PMS, it is ultra HNIs seeking customized portfolio. When you invest in a mutual fund, they come with a scheme. They will tell you the features of the scheme, how much money will be invested into equity. It will be in top 100 companies or top 50 companies or top 200 companies. You know that your money is invested in top 200 companies, for example. But you have no, intervention there. The fund manager will decide out of 200 companies, which companies to choose, in each company, how much amount to invest. But when you talk of PMS, you can tell your portfolio manager that this is how I wish my portfolio to be managed, where I want to invest my money. So this is called customized portfolio. In case of mutual funds, the portfolios are not customized as per your requirement. You have to understand the scheme of the mutual fund. If it suits you, you will invest in that scheme. Some people want to take high risk. They want high returns. So they would like to invest in small cap funds. So mutual fund scheme will give you the features. This is a small cap fund where all we are investing money. Which type of companies will be investing money? If you feel that it suits you, you will invest in that. Coming to flexibility strategies, high, long short, and multi-asset and derivatives. So long and short, both is there. Multi-asset investment is there and use of derivatives also there in case of SIF. In case of mutual funds, limited, primarily long only, that is only buy, and they will be using hedging only for rebalancing purposes. In case of PMS, it is flexibility is high because the portfolio designed for the investor is fully customized and there will be direct investment in stocks as well. Coming to regulations, specialized investment funds are under SEBI because they are part of SEBI mutual funds only. So mutual funds are launching SIF. So they are covered under SEBI mutual fund regulations. Mutual funds, same for SIF and for traditional mutual fund. When it comes to PMS, they are regulated by SEBI PMS regulations. Taxation in case of SIF is like mutual fund like tax treatment. In case of PMS, it is taxed at investors' personal transaction level. What type of transactions they have done? If they have invested into all stocks, if they have sold in short-term or short-term capital gain tax, if they have sold in long-term capital gain tax. So depending on their transaction levels. Suitability, SIFs are strategic choice for investors with significant capital who have already built a core portfolio with traditional mutual fund schemes. Core means when they have to meet their financial goals, they have to invest for different financial goals, they will make a core portfolio into mutual fund schemes. Now, they want to diversify into more complex niche strategies to potentially enhance returns, and they also want to manage risk across various market cycles. So now their risk appetite has increased. They have large amount of surplus to invest. They can think about investing into SIFs. Few examples of SIF mutual fund schemes. Edelweiss Mutual Fund has launched Altiva SIF, a hybrid long-short fund. Then Bandhan Mutual Fund has launched Arudha SIF. Union Mutual Fund has offered Arthya SIF. SBI Mutual Fund offers Magnum Hybrid Long-Short Fund. Quant Mutual Fund has also come up with QSIF, which comes in several categories like equity long-short and hybrid long-short. Mirae Asset Mutual Fund has launched Platinum SIF brand to offer specialized investment funds. ITI Mutual Fund has a fund named Divinity SIF. Now, when you come to, say, large cap fund, a normal mutual fund scheme, there are more than around 48 mutual funds in India, managing around 80 lakh crores of investment. Then, every mutual fund will have one large cap fund, one small cap fund, one mid cap fund, one flexi cap fund, one multi cap fund, sector fund. Now there are 48 mutual funds. They have So you have a choice of 48 mutual funds to make from. So you can choose the best mutual fund scheme in diversified equity fund, the best one performing in large and mid cap, the best one in flexi cap fund. So you have a choice. There are ratings given to mutual fund schemes. SIFs have recently started. So only few mutual funds have come with SIF mutual fund schemes. So slowly and slowly, depending on whether the fund manager is having the capability, the right qualification to launch SIF. Because SEBI has given a qualification of the fund manager and the experience before a mutual fund can start launching SIF schemes. Now, let's talk about consideration for investors. The fees are higher. Why? Because of active management by the fund manager. And lot of analysis is required for identifying both long and short opportunities. Because regular monitoring, regular research is required. Long short funds typically have higher expense ratio than standard long only index fund. So if you invest in index fund, which is a normal traditional scheme of a mutual fund, the expenses are very less. But when it comes to SIFs, because they have to do active management, buying and selling. Whenever you buy, a fund manager buys, he has to pay brokerage, he has to pay transaction charges, he has to pay STT. Whenever they sell, they have to pay brokerage again. So when they do regular buying and selling, every time they buy and sell, they have to pay fees. The investor who is investing into SIF has to see that the fees for SIF will be higher than a normal mutual fund scheme. Now coming to complexity and risk, short selling involves significant risk. Now, a fund manager assumed that price of this stock will come down. They borrowed stock from a broker and they sold that stock with the hope that the price of stock will come down. They will buy the stock at a lower price and they will give back the stock to the person from whom they have borrowed it. But instead of prices coming down, the price of stock went up. What will happen? So there'll be unlimited losses on a short position. So short position is very, very risky. Long means you bought. You bought with a careful analysis. But when you do short selling means borrowing a stock, selling, then buying it later at a lower price. But that doesn't happen because it is very difficult to predict market, where it will head, right? So although we can, based on various factors like technical charts, we can see the stock prices going up or stock prices coming down. But whenever you do any research, it may not always be right. It may go wrong also. In that case, there'll be complexity, there'll be more risk. So everybody who is investing into SIF has to be ready with the risk involved. So it may give you high return, but at the same time, because of use of derivatives and long and short positions both, there can be sometimes losses as well. Professional management, these strategies require sophisticated management and are often suitable for institutional or accredited investors who can tolerate complex investment strategies. Not for every, these schemes are not for a normal investor. These are for the investor who has the right knowledge. He can understand complex investment strategies and he can take more risk as well. Now, let's give you a few examples of equity-oriented investment strategies. So there is a scheme which is equity long-short fund. The minimum investment in equity and equity-related instrument will be 80% and maximum short exposure, which we discussed just now, short selling, to unhedged derivative position in equity and equity-related investment interest means 25%. So unhedged means you borrowed and you sold. So you are not owning that stock and you are selling that stock with the hope that the price will fall. Right. So you want to limit your losses. But what happens if the price goes up? In that case, the fund will suffer a loss. Right. So an equity long short fund is an investment fund, a specialized mutual fund that takes both long position in the stock expected to rise in value, and they will take short position in stocks which they expect to fall. This strategy aims to generate profits regardless of overall market direction because you are using both buying and selling both. So you will make profit when the market goes up in case of buy. You will make profit when the market goes down in case of sell. Here, what they are doing, they are mixing the strategy. Suppose I bought a stock and the price goes up, I'll make profit. Price comes down, I make loss. If I sell a stock, the price come down, I'll make profit. Because I sold a stock, I'll buy it at lower price, so I'll make profit. In this schemes, they are using both, buying and selling both. So wherever the market is going, market is either going up or it is going down. So they will take profits, right? So these are the strategies which are there in case of SIF. How they work? The core principle involves a fund manager conducting detailed analysis, which is often bottom-up analysis. Bottom-up analysis means they will analyze a company, particular stock. Top-up analysis means they will look at the industry, economy, then industry, and then they will come to stock. Suppose in today's economic scenario, if we feel that banking stock will do well, so we identified the economy, then we came to industry, banking industry. Now, there are so many banks which are there. Out of those banks, which stock to select? Which stocks, in which stock to invest? That is called top-down approach. In case of bottom-up approach, it means you are analyzing a particular stock. You are not concerned about the industry or the economy level. You understand that this stock will do well. So they will try to identify mispriced securities. They will take long position. The fund buys stocks it believes are undervalued and will appreciate in price. They will take short position when the fund borrows and sells stock it believes are overvalued and will decrease in price. So they will be able to buy the stock at a lower price. So in this way, they will make profits. The profit comes from the relative performance of the long and short position. How much return is coming from the long position? How much return is coming from the short position? The profit will come from there rather than the movement of the entire market. If the entire market is going up, in that case, people who have bought will make profit. If the market is coming down, people who have sold will make profit. But since they are mixing the strategies, so it will not be, their performance will be coming from both the long and short positions. Now coming to a debt-oriented investment strategies. A debt long short fund. The names are like this, long short funds. A debt long short fund is a specialized investment fund that invests in a mix of long-term debt across durations while also taking unhedged short position on debt securities through exchange-traded debt derivative issues. So debt for derivatives, debt for debt also there's a derivative market. So they will also be same thing, same strategy they'll be following as they're following for equity. This strategy allows fund managers to potentially profit from both falling and rising interest rates or a decline in bond issuers' credit rating, offering a more dynamic approach than traditional debt funds. When they assume that the bonds will do well in future, they will buy those bonds. When they assume that some bonds will fall in future, they will short these bonds based on anticipated interest rate increase or Fed downgrade. Now, if the interest rate goes up, the price of existing bonds will come down. In the present scenario, when the inflation is less, the interest rates are likely to come down. So when interest rates come down, the prices of existing bonds go up. So they will make a strategy based on that how interest rates are moving, how the prices of different debt instrument will move, long-term or short-term. So they will buy and sell those long-term and short-term bonds. This allows fund manager. The primary goal is to generate returns and actively manage risk. So they will try to manage interest rate risk. And suppose when you invested, the rating of the company was high, instrument was high. Over a period of time, the rating has come down. It means risk has increased. Rating has come down means the risk of default has increased. That is also called credit risk. So they will look at all these factors and they will buy and sell bonds based on various factors associated with different companies. It allows fund managers to invest in a pool of bonds. The regulator neither specifies duration nor the quality. So the regulator SEBI doesn't say that which duration you have to buy, which quality you have to buy. In case of normal mutual fund schemes, it is defined by the mutual fund that we'll be investing only in 4-star rating bonds, up to 3-star rating bonds. Depend. Quality of bonds is specified in the scheme features. But in case of SIF, the SEBI has not given any duration or quality rating. They don't specify. So a fund manager can buy bonds of any duration and of any credit rating. If they want to buy a bond of a lower credit rating, it means the lower credit rating bond will give high interest rate, will have to give high interest rate. And the bond which is high credit rating, they will be giving low interest rate. So they can have a mix and match of high rated bonds as well as low rated bonds, because SEBI has not given them any specification. You have to invest only in this bond. Why this has not been given by SEBI? Because this is an instrument which is with the high risk. This is an instrument which will be invested by only those people who can take high risk. When they are ready to take high risk, they will expect high returns as well. So fund manager can also invest in lower rated bonds because they will give high returns. Now coming to sectoral debt long-short fund. A sectoral debt long-short fund is a type of specialized investment fund that invests in the debt instruments of at least 2 different sectors. So they invest in 2 different sectors and use short selling. Again, they also use short selling. That is, they want to profit from the decrease in the prices. And in this way, they'll be able to generate returns. They will be able to generate returns in both rising and falling interest rate environment because they are doing buying and they are doing selling also. Interest rates may go up, interest rates may come down. Wherever they go, they'll be able to make profits. The fund manager takes long position in debt instruments expected to perform well and uses derivatives to take short position. That is, they bet on a price decrease or credit rating downgrade. It is like a sectoral debt fund. I'm sure we have the basic understanding of specialized investment fund. Thanks a lot and best wishes. I tried my level best to make you understand in a very simple way what an SIF is. SIF is not for a normal investor who is starting investment in mutual fund. They can start their basic in starting the investments in the normal mutual fund schemes like index funds, like diversified equity funds, large cap funds. Slowly, when they have built a portfolio, they can shift to mid cap as well as small cap, flexi cap, multi cap funds. Even sector funds can be an exposure. And there are other options as well. So I hope everything is clear to you. We'll take up the questions later. Let us first discuss about the program, which is our program CFP. Now, before I start with the this introduction about CFP, let me give a small brief about me more. I have worked in State Bank of India and I have also worked in UTI Mutual Fund. After leaving my job in UTI in 2003, I started doing this course. So if you hear these names, SBI is the largest bank, right? When I was there, it was the largest bank at that time as well. When I was working with UTI Mutual Fund from 1989 to 2003, it was the largest mutual fund also. Now it has come to number 5 or 6. And I have the privilege of working in the largest financial planning college as well. So I consider myself fortunate that, I have the privilege of working in the largest bank, then the largest mutual fund, and now the largest financial planning college. Well, so let's talk about CFP, certification advantage. I am sure you have heard about personal finance, financial planning, investments, and we just now spoke about mutual funds and SIFs. I think you have the basic understanding of that. Many of you must be investing into mutual funds as well. Now let's talk about how CFP program is going to help you. So CFP certification is started in India by Bajaj Capital. So this concept was brought into India by Bajaj Capital. And then Bajaj Capital thought of starting a college in India, that is International College of Financial Planning. We established this college in 2002. And since then, now 23 years, It will be completing 24 years soon. So for the last 23 plus years now, we have trained so many people into our CAP program, as well as we have various other programs as well, like MBA in financial planning, like PGDFP. Right. Now, let's understand a CFP. It is world's topmost certification in personal finance. It is recognized in 28 countries, including India. It is a gold standard certification in personal finance. I am sure you all have heard about wealth management. If not personal finance, wealth management is a very common word which we all know. This CAP program is a unique 4-in-1 certification program. There are 4 certifications from FPSB. It is ideal for students. Just like in CFA, we have 3 levels. In CFP, we have 4 levels. It is ideal for students, professionals, independent financial advisors, IFAs, bankers, insurance agents, to mention a few. It contains all of personal finance. Immediate career opportunities are there after completing your CFP. The time it takes is around 6 months to 12 months. And study for this CFP program is completely online. What is the eligibility for this program? Minimum 10 plus 2 pass, 12 pass, 18 plus years of age. There's no restriction of stream, whether you are from arts, science, or from commerce. Anybody can join this program who is minimum 12th pass. And a highly experienced people also do this course, certified CFAs, chartered accountant, they also do this program. So to get this, to join the course, you should be 12th pass minimum. But to get the CFP mark certification, you have to minimum graduate. So anybody who is into first year, second year, third year, they can join this program and they will get the CFP certification when they complete graduation. Minimum 3 years of experience required in banking, financial services, or insurance. Or if you don't have the experience in this BFSI sector, you can also opt for 1 year of supervised articleship training under a CFP. So ICFP will help you in getting that articleship if you don't have the experience of 3 years into this sector. Now coming to level 1 of CFP, it is called Investment Planning Specialist. There are 3 subjects in this: personal financial management, in which we teach you how to create household budgets, how to compute net worth, various financial ratios, a time value of money, how to compute if you want to accumulate 2 crores in 15 years, how much to invest per month, where to invest. That is taught in personal financial management. Investment planning and asset management will talk of different asset classes like equity, debt, real estate. We also have mutual fund in that. Derivative also we teach investment planning and asset management. And we teach you various asset allocation and rebalancing strategies. Coming to regulatory environment and legal compliance, this is a subject where we teach you about various rules and regulations which you have to follow, which every institution has to follow. So once you complete CFP level 1, you get investment planning specialist certification. Coming to CFP level 2, retirement and tax planning specialist, there are 2 subjects here: retirement planning and tax planning. Retirement planning is a very, very important for everybody. Everybody has to plan for their retirement. Everybody has to plan for their various financial goals in their life. Tax planning is important at every step of your life. When you invest, how much tax I have to pay? When I file my ITR, how much maximum tax I can save? Tax planning is very, very important at every step. So you get, once you clear level 2, you get retirement and tax planning specialist certification. Now coming to level 3, it is risk and estate planning specialist. There are 2 subjects here: risk planning and estate planning. So insurance planning is very, very important. It is actually becoming very important after COVID. Before COVID, many people were not aware, they were not focusing on insurance planning, but people suffered in COVID because they were not able to plan their health insurance as well as their life insurance properly. So now people are focusing on insurance. The number of policies which are being sold by insurance companies, term insurance as well as health insurance, accident insurance, have increased. It is very important that you have the proper understanding of insurance. Estate planning. We save money, we meet our financial goals, we build a house, we have investment. Now, how to pass these on to our next generation? is estate planning, legacy planning. If a person has not written a will, then as per the rules of the law, land, the property will be transferred, right? Otherwise, if you write a will, you will be able to tell that how I want my assets to be distributed to my family members. So that is very important subject in CFP level 3. Once you clear these three levels, once you pass these three levels, you become eligible for level 4. Level 4 is CFP final exam. In here, there are two components, two parts. One is case study where you have to create a plan. So we'll teach you how to create a plan for a person, looking at various aspects of his life, holistic planning. And then there is a multiple choice based exam also. For all this level 1, 2, and 3, we have multiple choice MCQ based exam. You don't have to write only the case study which you will make a plan for the investor. You have to write that also. They give you 1 month's time to prepare the plan. Right. Now coming to why the ICFP. Why I should join ICFP. India's first and largest premium education partner of FPSB. I gave you my introduction that I have the privilege of working with the largest institution in India. ICFP is one of them. The largest and the premium. More than 60 years of existence is Bajaj Capital, and Bajaj Capital is the founder of ICFP. Since 2002, ICFP has been number 1 in CFP education. We have the largest number of students. Wherever you go, I'm a CFP. From where have you done it? ICFP. Since I am associated with ICFP since 2004, so wherever I meet any faculty, they say we are your students. So I come across many people who are working at senior positions. When I interact with them in the meetings, in the webinars, in the programs, in summits, seminars, so I come across many people who have done CFP from ICFP. We have most experienced and qualified CFP faculty. Our faculties include CFPs, CFAs, chartered accountant, and doctors, PhDs. And practicing CFPs are acting as mentors and coaches for you. Collectively, we have more than 130 years of professional experience and approximately 75 years of CFP teaching experience. When we add the experience of all the faculties, it is this much. Highest number of CFP certificates and passing percentage. Highly placed CFPs are ICFP alumni. We have reached 100% record of passing percentage, and there is consistent track record for 21 years. These are our few of our faculty. If you want to go through their qualifications, see how qualified they are, how experienced they are. The more experienced, qualified a faculty is, the more he will be able to guide to the students. See some of our faculties. There's a long list of faculties, very qualified people. ICFP wins Educator Provider of the Year 2024-25 Torch Bearer Award. So we got this award from FPSB recently. So ICFP is the premium organization, premium college. If you study in ICFP, then you will have take the benefit of experience of so many faculties, their knowledge levels, their practical experiences. And I also won this award last year, FPSB India Award, that is Educator of the Year Award. So in 2020-24, I went to Gift City to receive this award, and we understood about Gift City as well. So great learning is happening for all of us when we are studying about financial planning. Now coming to study options, we have virtual live classes on Zoom. So we have online classes by experts. We have weekend, Saturday, Sunday classes. Saturday will be 2 hours, Sunday can be 3 hours. Class recordings are also shared for you. So if you're not able to attend any class or you want to revise the class, we'll be sharing with you the recorded or recordings of that class for your reference. Then we have also another option of e-learning class where we give you recorded videos. These videos are also recorded by the faculties, expert faculties. You can study at your own pace with the recorded lectures, mock test, etc. But we give you access to the e-books as well. Learning resources which we are giving you, we'll be giving you concept books and workbooks. So what we have done for each book, chapter wise, we have prepared workbooks. So you read one chapter from the concept book, And after that, you practice the questions from the workbook. Side by side, you practice from workbook. We also give you group projects. We have preview videos. We have world-class LMS, online learning management system, where we have all the notes of the all the subjects, where we have all the recorded lectures. So we have the world-class LMS. Class recordings are also given to you. Before you go for your exams, we have mock tests. For every subject, for every level, we have four mock tests. What we do? Suppose some student appeared for exam in November, level 1, level 2, level 3, and level 4. We meet them on the same day and we ask from them the type of questions asked in the exam. Based on the questions asked, we update our mock test on a regular basis. So when you access to mock test, you have the questions which have come in the previous exams available to us, available to you. So when you practice this mock test and you go for exam, you come and tell us in the next day, same day, that madam or sir, 65% of paper was from the mock test. It is like that. You have personalized mentors as well. We also conduct doubt clearing sessions. We have case studies for practice. We give you assignments in the class. If you are serious in your studies and you focus on your studies, you do all the assignments and you do workbooks, practice from workbook, you practice mock test, then there is no chance then you will not qualify. वो कहते हैं ना मैं पास कैसे होऊंगा, हम कहते हैं फेल कैसे होगा. यू कांट फेल क्योंकि आपने इतना अच्छा तैयारी किया. यू हैव बीन गिवन सो मच ऑफ गुड बुक्स, वर्क बुक्स, सो मेनी ऑफ नोट्स. आपको इतना गाइडेंस मिल रहा है आईसीएपी से दैट you will not be able to fail the exam. Now coming to FPSB board fees. FPSB registration fee, which is valid for 1 year, is rupees 18,000. But once you clear level 1, your 1 year will get extended automatically. So it's not that you have to clear in 1 year only. You may take 1.5 years, 1 year, 3 months as well if you are busy working professionally, right? You have to also apply for FPSB ebooks content. FPSB is the certification provider. So we are education provider. We'll teach you. But for just a college and university. So FPSB like a university. You have to pay university fees. You have to appear for exam. They will give you certificates. You have to also apply for FPSB ebooks. You have to pay for that 32,500 in total. Level 1 to 3, it is 6,500 each, and final level, it is 13,000. Then now coming to FPSB exam fee, you have to pay for all the levels exam as well. So level 1 to 3 examination fees is rupees 8,000. Level 4 final is 13,000. When you submit your financial plan for assessment, you have to pay 12,000 fees. Now you are a CFP. Now, once you have become a CFP, you have to also pay 10,500 for specialist certification fee. Once for all 3 levels certification, right? So this is what you have to pay for to FPSP. Now we have another option where you don't want to appear for 1, 2, and 3 level and you have the requisite qualification and experience. You can directly enroll with our CFP fast track pathway. That is, you have to only appear for level 4. 1, 2, 3 levels are exempt for you. Now, what is the eligibility criteria for that? You can be a CFA, you can be a CPA or CMA, ACCA, or you can be a chartered accountant or CA inter with 3 years articleship plus BCom, fellow member of Insurance Institute of India, Life or General, CIB, that is for banking, plus a graduation in any discipline, postgraduate degree in economics, commerce, finance, financial planning from a UGC-approved university, MBA all streams, PGDM all streams from an AICT-approved institution, Ministry of Education-approved institution, or other recognized Indian or foreign institution or business school. So this is the education. Along with that, if there is 3 years of prior work experience in BFSI sector, banks, mutual funds, insurance company, securities company, portfolio management brokerage. Now, so this is the eligibility criteria. So how we help you to do your CFP in fast track? We give you prep course book plus online access of concept and workbook for all 7 modules, 52 hours of prep live interactive sessions, capstone project mentoring, that is the financial plan which you have to make. We'll give you complete mentoring of that. We give you level 4 books plus live interactive sessions, exam mentor to provide guidance, mock test provided to stimulate the actual exam experience. We also give you doubt training session. If you feel that you are a working professional but you get less of time to study, and you can also refer to our notes for all these subjects which are uploaded on the LMS. So you can even refer to our notes and undergo the classes for level 4, and you will be able to clear your CFP. Now for fast track pathway, what is the FPSB board fees? Fast track, so when you take admission for CFP with us, you have to submit your documents. That is validation fees. You have to submit your document for verification. FPSB will confirm, although we know that you are eligible, but still they have this formality that you have to submit this fees and document. They will confirm that you are eligible for fast track. Then registration plus FPSB content that is valid for 1 year, you have to pay 34,000. When you submit your plan for assessment, 12,000 rupees fees. When you appear for your final exam, 13,000 fees. And when you get your certificate, your CFP clear, you have to get the certificate from FPSB. You have to pay 10,500 fees. That's the fees you have to pay to FPSB board, which is the certification authority. Now coming to ICFP, if you are joining in a virtual learning, that is online live class on Saturday and Sunday, it is 60,000 fees. If you go with e-learning mode, where you will be getting recorded classes for self-paced learning, 45,000. And if you register for, you are eligible for CFP fast track pathway, so you have to pay 45,000 fees. Now this is the fees for which you have to pay to ICFP. Today's offer, flat rupees 10% discount. You save on CFP study fees, virtual e-learning and fast track pathway limited time offer. You also save 16,250 rupees on FPSB content fees, which I discussed with you, 34,000 you have to pay. You will be getting 16,250 rupees exemption on that. We'll be giving with you some vouchers. We will be also giving you NISM 5A e-learning videos. These are mutual fund videos to clear your NISM 5A mutual fund exam. These videos are recorded by a person who has more than 35 years of experience in mutual fund, and he's one of the excellent trainers in mutual fund. We'll also be giving you secrets of successful stock trading, which is recorded by a person who is having great knowledge about stock market. So 7 hours of premium recorded lectures, learn the art of stock market investing. The normal fees for these two programs is 5,000. But if you take admission today, you get 10% discount plus 16,250 discount on your content fees and these two modules. So you save 6,000 rupees on CFP study fee if you are taking admission in virtual. And similarly, if you will be saving on e-learning as well and challenge pathway as well, save rupees 16,250 on FPSB content fees, only regular pathway for NISM 5A, and other you will be saving 10,000 here. So you are saving today 32,000 rupees. If you pay today 15,000, and you will be getting this offers for today, and your learning for CFP will also start. So you have to talk to anyone. This is the number which is shared. So you can connect with us to know more about CFP. If you have any question in mind, you can call at this number. And now I hope everything is clear about CFP and SIF. Now we can definitely take your questions. If you have any questions, we can take up those questions.
Ma'am, we have certain questions on the chat box also, ma'am.
Okay. Let me open the chat box. Just a minute. Is there any income or net worth condition you mentioned? Yes, anybody who wants to take a risk and who wants to take risk and understand strategy can invest in SIF, definitely. How much CAGR we can we expect? So these are the new funds. The result has yet to come. But yes, as I mentioned, this high risk, and when there's high risk, there is a high return also expected. But yes, there is no experience in this so far. Other mutual fund schemes, we know the returns for the last many years. But here we have yet to start. So you can, do with the, slow, we can go slow in this. What is the requirement for SIF distributor? If you're an MFD, you have to clear exam. So if you want to become a distributor for SIF, you have to clear derivative exam. NISM derivative exam. Krishan, can you see more messages?
Ma'am, there's a question from Jagdish ji. He's asking that can we get support from Bajaj Capital for 3 years experience after clearing all the levels of examination?
3 years experience is not required. If you can have only 1 year of internship experience as well, yes, we can help you. We are providing to our students this articleship for 1 year so that they become eligible to practice. We will definitely get support from Bajaj Capital. Any more question, Kishan? Can you see, please?
Ma'am, there's one question coming from Mr. Sunil Bhatt that what is the requirement for SIF distributor if you are MFD?
You have to clear a derivative exam. Amit. Okay. Today's offer you have also understood, right?
Any questions you want to ask from Madhu?
Any question, please
Just
ask the question.
unmute yourself. You can ask directly with Madhu, ma'am.
So any questions, please ask. Any question from SIF, any question from CFP? One chat. Message come in chat. Let me see. Accredited investor, I explained that people who have more than 2 crores of income and 7.5 crore of net worth in case of corporate. So they are called accredited investors. So they basically invest large amounts of money in every scheme. In case of IPOs also, there is a option given to accredited investors, separate categories there. Yes, please. Do we have to pay every year for CFP? Yes, you have to retain your certification. You have to pay 10,500 plus you have to also undergo CPD points, constant professional development points. So they will give you case study. You have to read that, journal. Out of that, they'll ask you questions. You have to answer those right. After reading those articles from the journal, you have to answer the questions at the back. So you are able to earn 15 CPD points. Along with that, you have to pay annual fees of 10,500 to FPSB to retain your certification. If you want to use CFP mark after your name. I think your question is answered, Jagdish Reddy. All of yours camera off. You can switch on your cameras as well. It'll be nice to see you and talk.
Any queries, Raviji? You can just unmute yourself. You can ask from Madhu,
You
ma'am.
can ask.
Yeah. So, Madhuji, this is Ravi Joshi. While I'm quite kind of experienced in terms of my work ex, I have more than 23 years of experience into banking and financial and various roles. I am just contemplating whether I should do it or not, and whether I'm, in fact, this is the third time or the fourth time I'm thinking about it. I think I can do it with some effort, but
I think you'll be eligible for challenge pathway, right?
yeah. So I had some conversation through CIB because I have done CIB also. So that is there. But I just wanted to know that if I want to change, let's say my stream and I want to start consulting, would this really make a difference? Is what I need to kind of understand from you.
Yes.
Also, to your, in fact, I had asked you first question where you said that there is a, I maybe I missed it, where you said that. So my understanding of SIF is this that anybody who wants to invest, let's say I may not have a net worth, but still I want to invest because I understand this product. Probably I can do it, right?
Yes. No, I discussed that was for accredited investors. I explained accredited investor.
Okay, okay.
Yeah,
So
that was the explanation for that. Anybody who has 10 lakh rupees to invest can invest in SIF.
yeah, correct, correct.
Yes,
Fine,
yes,
fine. So
yes,
this
yes.
was first clarification which I wanted, and second one is on this part. And when you are saying virtual training, so the session like which you took today, this is what you refer to virtual session, right?
Yes, yes. And
Oh,
we'll also have open Excel and open Word file also. So when we
okay,
have to write something to explain to you, we'll use that Word document to explain to
okay,
you, to Excel to explain to you.
okay.
So it is as good as your, physical classes. You don't
Okay.
have to travel. You are attending from the comfort of your home, and
Yeah.
we can have students from all over India.
Okay.
And
And
when we have
yeah.
number of students coming from all over India, we also learn from each other, right?
No, no, I
Yeah.
completely agree. And what is the time at which you do these sessions? Is it on
Sa-
Saturday, Sunday, or is it weekday?
Saturday, Sunday. Saturday we have mostly from 7 to 9
Okay.
or 7 to 9:30. Sometimes 5 to 7 as well, depending on availability of faculty.
Okay.
And sometimes students say we are not comfortable 5 to 7, so we make it 7 to 9.
Okay.
Sunday we are in the first half. From
Okay.
9 o'clock we start up to 1:30, 2 o'clock.
Okay. And got it. And how much of time do you think that is reasonably if we spend like Saturday, Sunday uh, with you? How much time should ideally take for a, I mean, decent kind of a person who understands and who is like to pass this exam?
So if
With your
you if you spend 2 hours from Monday to Friday,
okay,
2 hours every day,
okay,
and Saturday, Sunday you attend classes,
okay.
that's fine.
Okay, got it. Got it. Okay, fine, ma'am. Thank you so much for the clarification. Maybe I would like to touch base with some of your team member to understand more, which can be one-on-one. I don't want to waste everybody else's time on this.
So Krishan will be able to connect with you, Raviji.
Sure, sure, ma'am. Thank you, ma'am.
Okay. Yes, Sunilji, any questions?
Sunil ji, you just unmute yourself, sir. Please unmute yourself.
Now you allowed. Okay. I just wanted to know about SIF. You said you have to clear NISM exam for SIF. So you have to directly get, or there is some coaching required, or what is the modus to get this certified, or
So
whatever?
just like you cleared NISM mutual fund exam, right?
Right.
Derivative exam is little technical. You may
Yeah.
need guidance. You can try at your pace, but NISM also gives you trainings for that. So there are online classes by various institutes on derivatives.
Based on your experience, how much time it should take to get this cleared?
CFP.
No, not CFP, SIF, NISM.
Okay. So if you join CFP, we'll teach you derivatives in the investment planning level 1 itself. If you want to do directly, it all depends on, Sunilji, how much comfortable you are in derivative. Derivative is a technical subject.
Yeah.
Right? So it all depends on your knowledge. You may clear in 1 month's time or 2 months' time. Depends on how much time you're giving to your studies and how much clarity is there about derivative part.
Okay, and the fees and other things are available on NISM website, right?
Yes.
And about SIF, you said 10 lakhs. 10 lakhs is the minimum amount invested
scheme,
at
per
any given first time. And after that, you said you can redeem some units or whatever. And then the total amount at any given point should be 10 lakhs, or what is it?
Yeah, it should not be less than 10 lakhs. Suppose you invested 10 lakhs and it has come down to 9 lakhs. So they will tell you to take your money back, or you have to put 1 lakh rupees more. So minimum 10 lakh has to be there at all times.
But however, if it goes to 12 lakhs, you can redeem 2 lakhs and still you can continue.
Yes.
Jagdish ji, you want to ask something, sir?
Yeah. Hello.
Yes,
Yes,
yes.
please.
Ma'am, like if you want to do personally practice means like how many years of experience is needed? Like if you work somewhere.
So if you do CFP and you have 3 years of experience, you can do it. If you don't have 3 years of experience, we'll help you in getting 1 years of articleship, and under a CFP, so you will be eligible to practice to become a registered investment advisor under SEBI guidelines.
Okay. And even like in this, will we able to manage the funds of our clients regarding mutual funds?
Not directly you will be managing, you will be guiding investors where to invest. You will not be handling their money directly. It'll be through mutual funds or through other like small saving schemes, for Government of India schemes like that.
Okay. Thank you.
One question, madam.
Yeah, yes, please.
This is valid or recognized by SEBI as well as FPSB USA. So, if I want to practice in USA as an Indian citizen, is it allowed
If you
after completing
if you do CFP in India, suppose you want to shift US to US and you want to start your practice there, you have to clear only one exam because their taxation rules are different. So one paper only you have to clear, and then you will be CFP. Because every
that is in
country has
USA or here?
in
The
USA.
exam?
In USA.
US. Thank you.
Ma'am, I can't see any more questions from the aspirants part. We can wind up the session, and ma'am,
Yes.
it was really
Thank you very much.
interesting interacting with all of you, and especially Madhu ma'am. Thank you so much for your valuable time and to share your experience with all the aspirants who wants to become a qualified CFP in the industry.
Thank you very much, Krishnan, and thank you everybody who attended this session and who are able to expand their knowledge about SIF as well as to know more about CFP. I'm sure many of you will be returning to us with today's offer. It is a very good offer. You can definitely think about it today and get back to Krishnan Vashisht. The number is there in front of you.
Thank you so
Thank
much.
you very
ma'am.
much.
Thank you so much, ma'am. Thanks everyone for joining.
Thank you.